Hello everyone. Today we are going to discuss about small cap as a space and why that looks attractive, and also we'll be discussing about the Edelweiss small cap fund. The small cap space looks attractively valued on a relative basis given the growth prospects. They also look rewarding from a long-term perspective. Small cap valuations are attractive compared with large cap peers. Small cap index is trading at a reasonable valuation as compared to large caps. More importantly, during euphoric times like in 2007 or in 2017, small caps have traded at a premium to large caps. In hindsight, investing during such phase has led to subpar returns. The current valuation of small caps makes us believe that we are not in the euphoric times, and hence investor with investment horizon of 5 years should be looking at reasonable returns. While small caps were never a blanket buy, nor they would be, but the space offers emerging opportunities or themes which leads to alpha generation. Long-term themes like play on rising disposable income, unorganized to organized, China plus one are available in the small and mid-cap space. Contrary to some belief that small caps don't have established track record, there are multiple companies with established track record of more than a decade. These companies have dominant leadership in the segment that they operate in. In last decade, disclosure and shareholder interactions have materially gone up for small cap companies. This combination of being small in size within the larger addressable market with leadership position offers good hunting ground for investors seeking alpha. Now talking about the themes in the portfolio, fund is overweight on capex theme, real estate and its ancillaries, and automobiles within the consumer discretionary space. Gross capital formation in India has been an important driver for employment and GDP growth. Over past 10 years, private capex and investment in real estate has consistently come down. We believe after a subdued investment phase both in real estate and private manufacturing capex, we are seeing signs of an uptick over the last year. Housing sales have picked up post-COVID and the inventory levels have come down to a very reasonable level. A second derivative impact will be seen on the building material companies like cement, pipes, wood panels, tiles and sanitary ware. A lot of such opportunities are available in small and mid-cap space, and the fund has selected some of the segment leaders. On the private capex side, given that corporate balance sheets are healthy, banks are in much better position to lend, along with the impetus from the government through PLI, private manufacturing capex is at the early stage of its cycle. On the consumer discretionary side, while the pent-up or the revenge demand has been witnessed on the urban side, rural is yet to recover from cyclical lows. Fund has higher exposure in automobiles within the consumer discretionary space, as automobile sector has a good balance between urban and rural. Typically, automobiles have 3 to 4 year upcycle after a down cycle. We believe we are in early part of the upcycle. Growth rates we have seen in FY23 will not be visible, but a combination of reasonable volume growth and higher profitability should lead to earnings growth in the automobile space. Bottom of the pyramid has seen depletion in savings. We believe this should improve in times to come. We believe rural can be a dark horse in the times to come. Liquidity, broad-based earnings growth and favorable valuations have historically proven to be a good time to invest in small cap. Last but not the least, the fund picks well-managed businesses with scalable opportunities with superior return on capital employed, ensuring that its investments are sustainable and profitable. Happy investing!
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Visit www.edelweissmf.com